When people think about the retirement and what it's going to cost, there are many things that come to mind. How much to save, healthcare costs, maybe even inflation. And while all those are very important, we have guests today that warn about something totally different that could be your largest expense in retirement. Joining us today to discuss this is Gary Mattson and Taylor Stewart, part of the family at Mattson Financial Services, the sponsor of this segment. They're a firm that's been helping people retire successfully here in West Michigan for decades. You can also catch them on their popular radio show, Money Mentors. And so, Gary, Taylor, what do you think is the most important thing for people to consider who are nearing retirement or already there?
Well, you mentioned some great ones, right? Inflation, healthcare costs, taxes, without question, is the biggest one that we see, and one of the biggest areas of planning that we typically need to work on the most with clients as they come through the door. Whether it's just how their accounts are set up by tax qualification or the amount of income that they need. A lot of times people even come through the door and not realize that when you pull money out of your 401k or IRAs, that's all taxable income, not to mention the pension and a part of your Social Security. So there's a lot of different areas that come into play when it comes to that tax bill. And if you're not careful, it can get out of control, and it can get out of control fast. And not only fast, but for the rest of your life. So it's very expensive, yeah. And so it's something that we need to work on right up front, whether you're already retired, you're close to it, to make sure that we're setting up those tax qualifications. So when you pull that money out in retirement, we can kind of be picky and choosy where we pull it from to make sure that we're keeping you in a lower tax bracket to help continue to grow that money, but still provide all the income that you need.
Yeah, so you help clients better prepare for that tax bill that is inevitable, of course, as we know, during retirement.
Yeah, and it's really about understanding what you can do. Most people don't realize that you have a choice. We can set you up. We can't choose when the market goes down, and we can't choose when the market goes up. We can choose how we respond to it. And that's the same thing when it comes to taxes. We know we're going to pay them. We know what the tax bracket is today, but it's one of those things that's always going to change. We had a one of our better clients come in and say to us, you know, when are we going to be able to be done talking about this tax issue? And I said, you want that? I can give you an exact date. And he said, what's that? And I said, the day you die. Now it's going to be passed on issues to your children. You don't have to do anymore, but they're going to. Because the tax code changes, the income they need changes. So that's what we need to do, is sit down every single year, look at our clients and how we can actually manufacture the maximum amount of income with the least amount of taxes.
And you help people with certain tax strategies. Let's talk a little bit more about those. Yeah,
so a couple of popular ones this year. It's been a very volatile market, right? We may have some stocks or bonds in our non-qualified account that have appreciated a lot, and then we may have some of those stinkers in there that maybe haven't done so well, and it's time to, you know, change up the portfolio. So maybe we should harvest some of those losses against some of our gains to help lower that tax liability for this year. Another thing is looking at like Roth conversion, so taking money out of your IRA, paying the taxes on it, being careful how much we pull out, however, so we're not, again, bumping up to that next tax bracket. Now putting it into an account where it grows tax-free for the rest of your life, and then when you turn 72 and those required minimum distributions come around, you don't have Uncle Sam saying, well, you got to take X amount out of this account, whether you like it or not. Oh, and by the way, if you don't, we're going to charge you a 50% penalty on top of the taxes that you're already going to pay. So looking at structuring that a little bit year after year is one of the big things that we look at.
And there's also the last piece, of course, that we like to talk about is tax deferred. So it's kind of nice because if you have non-qualified money sitting in the bank and every year you're getting that 1099 for the interest it made, well, now you're paying taxes on money you didn't even use. So we like to say reposition that and get that tax deferral going, so you're getting, you know, interest on the principal, interest on the interest, then you're getting interest on the taxes you otherwise would have paid. So that tax deferral piece is another one that's great to use. So that's basically the three stools of taxes.
Sure. What kind of savings are we talking about when it comes to using some of these tax strategies?
It really doesn't matter. We like to talk about making money work as hard as you did for it. And so we like the clients to have that, you know, emergency fund, as we like to call it. So 90 days minimum, but up to 6 months. But after 6 months, if you're leaving that in the current interest rate environment, you're really losing spending power. So we want to get that money into a position that you're not picking up that much risk, but you're also getting much more returns. So there's buffered indexes we can use. There's other deferral type of products we use. Right now you're seeing a lot in the news about junk bonds or equities being really, really tough out there. So again, dividend paying, stocks. So we're looking for things that can give us income along the way. And while prices are fluctuating and stocks are fluctuating, we're still getting that steady stream of income.
Sure. Well, how can our viewers take those first steps toward tackling this?
Well, if they saved at least $500,000 or more for retirement or planning for retirement, what we talked about the last 24 months are getting ready to go, they can call us and we'll sit down and do what we call a complete enhanced plan. Not only are we going to show where the investments are going to be in today's market because of inflation and different things going on and taxes, but we're going to take that tax structure, show them what income they're going to have and how we're going to tax savings throughout the next 3, 4, 5 years with the current structure we have.
Well, sounds good for you at home. If you want to see what kind of retirement tax bill you might be facing, and if there are ways to potentially reduce or even eliminate it, take advantage of that special offer from Mattson Financial. Gary, Taylor, and the team will sit down with you, do a complete evaluation of your financial outlook, and develop a comprehensive retirement plan to get you where you deserve to be, living your dream retirement. Remember, this is especially important for those who have saved well or business owners, so if that's something you do not want to let pass by, it is available complimentary, as Gary said, to the first 5 callers today, so secure that spot now. Call 616-514-3831. That number again is 616-514-3831. Gary, Taylor, thanks for stopping by. We appreciate the great advice.
Thank you.
Thank you.
And this segment is sponsored by Mattson Financial Services. We'll be right back.
This is 8 West.